Yes, the market is crashing and everyone is freaking out. A lot of people have never seen a market like this. And the question really is this just a major correction, or are we going into a bear market? Okay, so we've been experiencing crazy volatility in the market. Yesterday, the Dow was down over 1,100 points, and it ended up closing up 99, which is just insane volatility. The VIX was up in the high 20s, close to 30, which indicates enormous volatility. Okay, so this is essentially a hangover from an easy money policy, excessive money printing, and excessive fiscal stimulus that the government has been pumping into the economy. This can be seen in the excessive inflation that you see with the 7% consumer price print, and wholesale prices were even higher. And due to this excessive inflation, you can pretty much assume that the era of easy money is coming to an end. What was even more concerning to the market is the Fed has indicated that it is making major shifts in its policies. One is they've indicated there's going to be 4 rate increases during 2022. They've also indicated that they're going to be rolling back the securities purchases, which is essentially printing money and buying securities, adding liquidity to the market. And then also, and probably most disturbing to the market, was that they're actively going to start reducing the securities on their balance sheet, which have ballooned to over $9 trillion. The market reaction has been swift and definitive. It's really been across the board, but you've seen the most damage in crypto and also these high valuation tech stocks, and also startup companies like EV companies, SPACs. They've all gotten completely massacred. And the other thing that's really spooking the market is the geopolitical situation. In Ukraine, it looks like there's going to be an imminent invasion by Russia of Ukraine, and this would increase the volatility in the market and precipitate additional sell-offs. Now, so the real question for us as investors is this a correction, or are we going into a bear market? So far, if you look at the major indexes, the Dow is off around 8%, right? It's going up and down, but it's around 8%. The real damage has been in the NASDAQ. The NASDAQ is down around 14% from its high, and the S&P is down between 8.5% and 9%. Now, if you look at the definition of a bear market, it's basically down 20% from its high for a sustained period of time of at least several months. So if you go by that definition, we are not yet in a bear market. This is still considered a correction, and a correction is defined as 10% or more or below 20% from its high. So we're basically in correction territory at this point in time. Okay, so what do you do while you're going through this period, and what do you do in your portfolio so you can potentially take advantage of some of this volatility? The first thing I would do is raise cash. Raising cash is good because it will cause your portfolio to be less volatile, and at the same time it'll give you dry powder to be able to make some purchases when these companies are presented to you at extremely low valuations. I generally recommend that your portfolio have approximately 25% cash at times like this. The second thing I would do is, in addition to being defensive, I would look for bargains. I mean, we've talked on this channel about many stocks that we find attractive. A couple just to mention are Moderna, which incidentally right now is probably one of the cheapest growth stocks in the market. The other one that comes to mind would be PayPal. Extremely cheap right now. Here's one of the top e-commerce companies in the market. Tremendous growth potential, and it's selling extremely cheap. The other one I would think about, different companies in the energy space like Exxon, like Chevron. These companies pay excellent dividends, and they're far less volatile than some of the growth stocks and some of the high-tech stocks, frequently which have little or no earnings. The next thing is, don't panic, okay? These types of corrections are completely normal in the market, and you shouldn't get caught up in daily price movements, because what you should be doing as an investor is you should be looking forward 3 to 5 years and saying, where am I going to be with this company 3 to 5 years out? The other thing is, and hopefully this channel can help you do this, is you've got to do the work to understand what you own. Okay, you got to understand the businesses you own, you got to understand their growth prospects, you got to understand how they make money, you got to have a viewpoint of where you're going to be in 3 to 5 years, okay? You make money and get rich in the stock market, not in the short term, but in the long term. Stay tuned to this channel for more great content on investing to make you a better investor. So for now, Greg out.